Hi traders. So many of you asked about trading in December and we decided to make an interview for you, a Christmas edition, to answer all these questions in a simple way.
So I keep hearing people saying December isn't the best time to trade. Why is that?
It is because December has different kind of unique market conditions that makes it very hard to trade efficiently. And these are mainly like 5 reasons.
Okay, 5 reasons.
Yeah.
What's the first one?
The first reason is low liquidity. It means many traders are going on vacations, institutions are not really trading, banks are closed, and therefore there is a low volume in the markets, and so every major or bigger buy or sell is going to move the markets more.
Wait, so just because people are on vacation, the market becomes harder to trade?
Something like that, because it is a basic example when, for example, there is a store and there is less inventory in the store and less people are buying stuff, the prices are more volatile. They can be changed changed easier, because, for example, one person can buy all the stuff at once because there is less of them, and therefore the prices are going to go up because of the less product.
Got it. What's the next challenge?
So the next challenge is in exact correlation with low liquidity, and it is high volatility. And when there are less participants, it means, as I said, that every bigger buy or sell can move the markets more crazily. And so there are going to be movements that are highly volatile and that are moving the markets in random ways. Therefore, the systematic traders, so basically traders who are trading with algorithms, EAs, are going to have a bad time, because these times are not really good for systematic trading, because the patterns are not there. They are random events, like trends are going in one direction and then they reverse completely randomly and all these kind of things.
So the market kind of gets like jumpy?
Yes, exactly, because the reduced liquidity is leading to increased volatility, and therefore the market is going to jump around much more than any other time of the year. And it is also on the first week of January as well, because banks are mostly closed at that time and people are going on vacations and they are celebrating. So these are not good times to trade.
Interesting. Does the end of the year bring other factors into play?
Yeah, for example, the bigger institutions, funds, and these kind of companies are actually doing a tax. They want to avoid as many taxes as possible, and so they are selling the stocks that are not that good, and that is going to deduct their taxable profits, and it is great for them, end of the year, because they are not going to have to pay as many tax in January, and it is bad for the retail trader because the markets are going to go crazy and you are not going to know what to do, and the entire holiday you are going to watch your phone and you are not going to be able to eat your grandma's great cookies like these ones.
What about the holidays themselves? Do they affect trading?
Of course, because, as you know, in December there are holidays, and also many instruments, the trading hours are changed, of course, many banks are closed, and countries' systems are closed, and there are gaps in the markets. And for example, many traders are falling into this, like you open the position and you didn't close it before the break, like the holidays. And the issue is that there can be really big events happening in the world, of course, in this time of the year as well, like fundamental stuff like news, wars, anything, natural disasters. And so when the market opens, it can create a huge gap that is going to even blow your account. So my recommendation is to close your trades at this time before the holidays, or don't even trade in December, or trade with a low risk, like around 0.5 to 1% trade per trade, and don't hold more than 5 trades. It is my recommendation.
That sounds tricky. Is there anything else happening in December?
Definitely. So, institutions, they are very tricky. They love to play around with retail traders because, after all, what they are making their money from? Retail traders. Because what you lose, they gain. So they are doing stuff like, for example, window dressing. And it is like when they are at the end of the year, they are selling off their weaker stocks and they buying good stocks that are good, like that are looking good for their portfolio, that they are holding those stocks. And so for the reports for outsiders who may want to invest, they are looking very good. And this is a trick that they are doing at the end of the year.
That all makes sense. And what about the countries that don't have major holidays in December?
It's actually a great question. Yeah, I never thought about it in my videos. So it is the first one out of my 300 videos. So the situation is that this world is, if it's good or bad, but it is very global. So the countries are very interconnected. We have seen this with COVID. You can't avoid the major supply chains that are on the entire globe. And so even the countries that don't really have holidays in December, they are going to feel it because the US, Europe, the major hubs of the world, of course not all, but many of the major hubs, major stock exchanges, major companies are having a break. And therefore, there is going to be an impact even in the economies that are maybe big and they don't take a break, but it is going to have an impact on their trade with the US, Europe, and all these markets, and therefore their markets are going to be affected also.
And what's your advice for traders for this whole season?
So, as you know, I am developing EAs, I am also trading, I am doing all kinds of stuff, and it is tough to just keep 1 month of trading because trading is also quite addictive, and so traders want to trade. And for those traders who just can't let trading go for 1 month, I have a recommendation. I'm not going to say just don't trade because it's not that easy. They are going to trade, so I want to give real advice to them, and it is trade with a low lot size. If you want to trade, experience trading in December, trade with only 0.01 lot, or just like 0.3% risk per trade. So basically with a lower volume and lower risk. And for traders who are more like not that not have that temperament, that intensity that they want to trade always, just keep this month because it doesn't worth it. Many years when I was trading in December, I had the worst time of my life. Even in Christmas Eve, I was looking at my phone like to check the trades. It doesn't worth it. It doesn't worth it, and you are not going to make money if you are that focused on it. And because the markets are so different, you are going to at the end lose money, and it is always going to be a bad experience. So this is my major advice. And as I said one thing, that for systematic traders it is the hardest, but of course for gamblers and non-systematic traders, every month in the year is the hardest. So I didn't say that, yeah, if you are not a systematic trader, December is going to be a great month for you.
These all were great advices. Thanks for breaking it down so clearly.
Yeah, I'm always happy to help beginners.
Ciao.